Hi, my name is Jacquelyn Melanik. I'm a reporter for Blockworks. We're here at the Digital Asset Summit in New York City. I am joined with Andrew Peel. He is the head of digital asset markets for Morgan Stanley. Thank you so much for taking the time to join us today.
Thanks for inviting me, Jacquelyn.
Yeah, and so my first question was, how do you think traditional financial services and institutions will overlap in the future with digital assets?
Yeah, it's an interesting topic. I think it's really early stages at the moment. We have these two worlds effectively operating in parallel. So Bitcoin came, brought this significant innovation of the public blockchain. Bitcoin as an asset class starts to become more of an institutional topic, certainly from the macro investors. And in the meantime, the market's moved on significantly with the launch of DeFi, be it Ethereum based or some of the other blockchains actually locking assets up for use in DeFi. These are two very separate worlds at the moment. However, some are starting to get licensed. You start to see the likes of Aave getting the money transmission license in the UK. You start to see the likes of Compound, for example, offering treasury services to fintechs. And then at the same time, you start to see efforts from traditional finance moving in, being maybe slightly more innovative. Some of the traditional crypto-focused banks offering 24/7 dollar liquidity using blockchains internally. And I see these two worlds continuing to evolve in parallel and at some point begin to join and have traditional services offered on these public blockchains.
Right. One of the questions I had is following up to that. You said you could see them joining. How do you think that would evolve coming from your traditional background at Morgan Stanley? Where do you see the merge if there is one?
So it's an interesting moment at history of evolution of traditional finance. On one hand, we have these huge explosion of innovation on decentralized finance platforms where there's use case for assets to be used for collateral, for lending and borrowing. And some of these platforms have grown significantly. 1 year ago, there was only 800 million locked on DeFi on Ethereum, for example, and currently we have over 180 billion. So the growth, I think, can't be ignored. On one hand, these platforms grow significantly, but they're also very limited in terms of the regulatory requirements. They're open source software using digital assets which aren't necessarily clearly regulated in every jurisdiction in which they operate. Mm-hmm. But I start to see the combination of the two worlds. If you look recently, the European Investment Bank, EIB, issued a security, a bond on top of public Ethereum. So Ethereum, the asset, ETH, was used, for example, by the EIB to issue a security. So I think the power there is these public, open, permissionless networks being used for traditional securities offering, where you have the innovation of the public open source blockchain, but the structure and regulation of the security offering.
That's great, thank you. And then my last question was, what are some key takeaways you've gotten so far from this summit?
I've found the conversation has evolved significantly over the years in these digital asset summits. I find this particular event very professional in terms of the participants. Some of the early crypto events were mainly people in hoodies or t-shirts talking about completely changing the world of finance and, removing the banks from the equation, whereas I find now the industry starts to work together. You see some really innovative use of the technology, but with the right regulatory framework in place, and these types of products continue to evolve, and it's conferences like this that enable that combination of the two worlds to find a way to work with each other.
Yeah, it's great. Thank you so much for taking the time to talk to me.
Thank you.